Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about QORVO INC quarterly report. QORVO Inc. offers a diverse range of businesses and services across various markets. The company's primary segments include high-performance analog, HPA, provides radio frequency and power management solutions for defense, aerospace, 5G, and 6G infrastructure markets. Connectivity and Sensors Group, CSG, offers connectivity and sensor solutions featuring UWB, Matter, Bluetooth Low Energy, Zigbee, Thread, Wi-Fi, cellular IoT, and MEMS-based sensors for smart home, industrial automation, automotive, smartphones, wearables, gaming, and enterprise access points. Advanced Cellular Group, ACG, supplies cellular RF solutions for smartphones, wearables, laptops, tablets, and other devices, as well as foundry services for defense primes and aerospace customers. The company sells its products directly to original equipment manufacturers and design manufacturers, as well as through a network of sales representative firms and distributors. QORVO Inc.'s stock price surge. A year of growth and optimism in the past year, QORVO Inc. QRVO has seen its stock price increase by a notable 21.92%, with a significant jump of 33.2% over the last 12 months as of October 31, 2025. Several key events have contributed to this impressive performance. The most substantial factor was QORVO's announcement on October 28, 2025, of its preliminary second quarter financial results exceeding expectations and a definitive agreement to merge with Skyworks Solutions in a $22 billion deal. This news sparked an 11.2% surge in shares, followed by additional gains on October 29, 2025. Strong earnings reports, including QORVO's first quarter fiscal year 2026 report on July 29, 2025, showcasing robust demand in defense and aerospace sectors, also boosted investor confidence. Analysts upgraded their ratings and raised price targets around October 28-29, 2025, further fueling the stock's growth. A general easing of trade-related fears with China in mid-October 2025 also positively impacted the semiconductor sector, contributing to QORVO's stock gain. These factors combined have driven QORVO's stock price upward, reaching a new 52-week high and solidifying its position as a leader in the industry. The primary drivers of revenue growth or decline are largely influenced by the company's strategic decisions and industry trends. On one hand, revenue growth is driven by increased content in flagship and premium tiers of smartphones, defense and aerospace programs, and the transition to broadband DOCSIS 4. These factors contributed to a $26.4 million increase in HPA revenue. On the other hand, revenue decline is attributed to the company's decision to strategically reduce exposure in mass-market Android smartphones and the timing of new product releases for Wi-Fi components. This led to a significant decrease in CSG revenue, totaling $84.5 million. These factors highlight the importance of strategic planning and market timing in driving revenue growth or decline. Net income and profit margins. A shift towards growth. The company's net income has undergone a significant transformation, shifting from a loss of $17,435 in Q3 2024 to a gain of $119,603 in Q3 2025. This substantial increase of $137,038 is a testament to the company's improved financial health. Furthermore, year-to-date, YTD net income has also seen a notable rise from a loss of $17,021 in 2024 to a gain of $145,197 in 2025. Profit margins have also experienced a significant boost. The gross profit margin has increased by 4.3 percentage points in Q3 2025 and 4 percentage points YTD 2025, reaching 46.9% and 44.2%, respectively. Operating profit margins have seen an even more substantial increase of 13.9 percentage points in Q3 2025 and 9.2 percentage points YTD 2025. The reasons behind these improvements are multifaceted. Favorable business mix, product cost reductions, and a decrease in research and development expenses have all contributed to the company's enhanced profit margins. Specifically, the HPA segment has benefited from improved product costs, favorable business mix, and higher revenue. These factors collectively point towards a shift towards growth and financial stability for the company. The company is indeed generating positive operating cash flow, a crucial indicator of financial health. According to the provided information, the company's operating cash flow has been consistently positive over the past 2 years. Specifically, for the 6 months ended September 27, 2025, the company generated $266.9 million in positive operating cash flow. This trend is also reflected in previous periods, with a total of $2,251,976 in positive operating cash flow reported on page 2 and confirmed by specific numbers on pages 13 and 33. The company's debt level has remained relatively stable over the past year, with long-term debt fluctuating between $1,549,185,000 and $1,549,215,000. The introduction of new notes, such as the 2029 notes worth $1,350 million, does not indicate a significant increase in overall debt. Similarly, interest expenses have decreased by $4,111 in the third quarter and $2,418 in the 6-month period compared to the previous year. These changes suggest that the company's financial situation has remained relatively stable, with no significant increases in debt or interest expenses. Management's outlook: a focus on liquidity and adaptation, the company has successfully completed a restructuring initiative, divesting its assembly and test operations in China. This move is expected to improve the company's liquidity position, enabling it to meet both short-term and long-term cash requirements. However, management acknowledges that operating cash flows may be insufficient if demand for their products decreases significantly. To mitigate this risk, the company may seek additional debt or equity financing as needed. Management is also closely monitoring the potential impact of the One Big Beautiful Bill Act, OBBBA, on future periods, but currently does not expect it to have a material effect on their consolidated financial statements. Overall, the company's strategy appears to be centered around maintaining liquidity and adapting to changing market conditions. The company has made several key acquisitions and divestitures in recent years. On the acquisition side, notable deals include mergers with unspecified companies, page 25, HPA, page 28, and Skyworks, confirmed on page 37. On the divestiture side, the company has strategically reduced its exposure to mass-market Android smartphones, page 27, and sold its CC Power device business in January 2025, page 29. Additionally, it has divested CSG and ACG businesses, page 28, although specific details are not provided. The company has a share repurchase program in place to buy back up to $2 billion of its outstanding common stock. In the 6 months ending September 27, 2025, it successfully repurchased approximately 1.4 million shares for $115.4 million. This indicates that instead of paying dividends, the company has chosen to utilize its funds to buy back shares from the market. Concerns about inventory buildup or supply chain disruption exist. Our financial summary reveals several red flags that indicate potential issues with inventory buildup and supply chain disruption. Notably, raw materials inventory increased by $5 million over a 6-month period, suggesting an accumulation of unsold goods. Furthermore, financing costs related to certain inventory are subject to repurchase under a supply agreement, adding complexity to our financial obligations. Additionally, the timing of customers' forecasts has led to increased inventory risks and costs, while manufacturing facilities have been underutilized. Changes in government trade policies, including tariffs and export restrictions, also pose a threat to our supply chain stability. Finally, an increase in accounts receivable due to customer device launches and large defense programs may indicate potential inventory buildup. These factors collectively suggest that we need to reassess our inventory management strategies and supply chain operations to mitigate these risks and ensure business continuity. That concludes the financial summary for QORVO INC. Feel free to comment below, and I will be happy to answer them when possible.